Welcome back to the episode of my trading vlog, where most of the views come from returning subscribers. If that's you, I'd appreciate the like. If not, consider subscribing. There's a reason why people keep coming back. Today, there's going to be some new outro music at the end, so be sure to check that out. Let me know what you think in the comments. We're going to go over a lot today. AMC, GameStop, SPY, QQQ, maybe TSLQ, which is a bearish ETF of TSLA. If you missed a live stream, tune in. I'm going to try to do those on a more regular basis, and I'm really trying to make some life changes that gives me more time to do these things. I really want to do this. It's great. Let's go. AMC on the hourly time frame, continuing to follow this horizontal triangle that I identified a while ago. I speculated it would appear. It did. Called the flip in the price. It formed that top trend line of that, and now we're seeing a bounce. It looks like a double bottom, so I'm thinking that we might actually come up a little bit, come back up to test that 450 yet again, because we don't have 3 trend line touches yet. It might be really tempting to take the beginning of this pattern and begin it back here, but starting a triangle at the very end of an impulse before a corrective trend is perilous. And I'm telling you, if your triangles aren't working for you, that's probably your mistake, because as soon as you get an extra touch point along one of the trend lines, you've now flipped the reversal or the breakout of that pattern, and so you would be exactly wrong probably, right? Here we go. This looks like to me a B wave extension inside of a larger B wave. This B wave started, of course, with an impulse A. That's how corrective waves work. We've seen the downtrend break. We've seen upward pressure arrested, and so we get this triangle. Let's go take a peek at APE really quickly while we're talking about AMC. Coming down, we broke above here, and I was like, I'm not calling that a confirmed target. This thing's coming down. That was bias. That was a judgment call, a gut call. It came down and back to 183, which is a significant level of support and resistance technically from the impulse that built the A wave at the minute degree. We're seeing now that perhaps we could also probably start building some sort of diagonal here too. Hey, and don't include this low. That's the trick. That's a trick. Don't include that low. Moving on to GameStop. Here we go. Oh, look, another one. Doesn't this look just like AMC at this point? It really does. And this could be part of a leading diagonal triangle where we get an upward breakout. So if we get an upward breakout from this pattern, if we get above 26.95, then target 30, then target 35. But right now, because we're below this uptrend through here, forming the lower side of this pattern, I'm looking for 20.72 or 17.96 rather than those other targets. But it doesn't mean we can't reverse out of here. After all, this very well could be just less of a steep slope, and this triangle could result in a reversal the other direction. Remember, price can always do whatever it wants. We can only give percentages of certainties. That reminds me, there was, let's see here, I believe a rising diagonal on BBIG. Whoops, don't put the $ in there. And I want to check up on that, see how that's doing. I tweeted about this. During the live, I was talking about how we would see the upper trend line tested, and at that time, price was low. I said we're going to come up. There we go. This is, you see how I had to adjust that on this time frame, on the 15-minute time frame. We don't quite have the back test. We did come up, and this is going to be a 3-wave reactionary probably. And if we get above, like, seriously right here, ooh, we're going to call this critical resistance. And it might be bullish confirmation. It might be bullish. We're gonna color it green, and we're gonna keep an eye on it. This is just it. It's like, I doubt we'll get above there, but if we do, then we gotta be like, wow, this thing's gonna rip, right? So for right now, we're just watching this with a lot of scrutiny, because we do have that rising diagonal in wave C, and we have had this uptrend broken. In a leading diagonal triangle, it's not a problem. In an ending diagonal triangle, it is. Typically, we get ending diagonal triangles in wave C and leading diagonal triangles in wave A, which is back here, which means that personally, I'd be looking for a topping pattern through here. If not, then we're going to be relabeling this into a series of third wave extensions, and we'll talk about bullish price targets then, but we're going to have to get above 282 first. To get above 282, we'll talk bullish, okay? But not yet. It's too early. Just too early. Let's talk about flags, because Playboy also had a flag today. Zooming into the 15-minute time frame here, you're going to see I have a series of waves labeled underneath my sub-mini wet waves. Maybe I call them micro waves. That was bad. I'm not going to edit it out, though. So we got 1, 2, 3, 4, 5, A, B, and C. The corrective target at 169 being reached perfectly. Bullish divergence signaling the end of this corrective trend. That's a pretty good little falling wedge through there, if you want to call it that. I don't really think that's what it is, but if you wanted to, fine. It's really a pennant of doing chart pattern analysis. We've had the upward breakout. Price is pushing higher. If we can get above 182 again, then we're looking for a measured move up, pushing way up. I don't have it down here. We're going to use the extension tool quickly, take the low to the high to the bottom of the correction, and that's close enough. We'll look. 189 is the first target. $2 is the next target, and this is the smaller. This is a small wave degree. On a higher wave degree, I've got other targets towards $2 or towards 250. We've definitely been building out this triangle that I identified a while ago, and on the hourly time frame, it looks a little weird, doesn't it? Let's go to the daily. See how? And do I have a? I haven't looked at this chart in a while. There we go. This triangle. This triangle is filling out nicely, isn't it? Just gonna clean this up a little bit. This chart's kind of dirty. Gonna do this. Do I like all these horizontal levels of support and resistance? I think I do. We passed above a critical level at 170. Found some support. This is looking good, right? Triangleception through here. One on the daily, one on the 15-minute time frame. Let's look at the candle chart here. What's this look like? Zoom in a little bit. You know, what I'm noticing about Playboy is that we tend to get the impulses in the morning and then the corrective trends in the afternoon. We had a pretty big run right away, and then after that, we got the corrective trend and the small bounce, which is making this wick look really bearish. I mean, this looked really bearish too, right? But price turned around and rallied back up, almost completely retraced that move, but it didn't because we're moving through converging trend lines in a horizontal triangle. If this is a reversal pattern, then it will be brutal. We can look at SPY and we can see what happens when you get a reversal out of a horizontal triangle. You get this. You get this, and even if you don't think it's gonna do it, the target was up here, and the chart pattern analysis is sometimes just too good. This was a pattern I identified back in January. Of course, I was bearish all the way until we broke above 418 back here. Exited my short on SPY. Price continued to rally and push higher since then, and as I've been saying for the last couple of days, 465 is the next target, and we have to respect that. It's not a rule that it gets here, and I am looking for a top, and this could be the wave E of this triangle, but we're gonna have to wait for the price to actually reverse. Volume, of course, is coming down, and we've had a bearish divergence break in the RSI, which is typically, for me, signaling that we're finishing a motive wave at a smaller time frame, probably from an extended wave. And now we're watching the motive wave of the next degree higher completing, and that gives us the spike in the RSI. If we get above, this is probably it right here. If we see the RSI get above 76.70, what is this exactly? 76.96. So we'll call it 77. If the RSI, this is like, we'll call this blow off top confirmation. Blow off confirmation. Oh man, blow off top. There we go. See, it's safe for work. Anyway, so it's getting there. And it's going to be harder for the RSI to get to that level the more quickly that price rises, because it's averages, and if the price averages continue to stack up on each other, it's going to get harder and harder and harder to make a significant move in that increasing range. Moving on from SPY, we've hit the meme stocks. We've talked about some other things. Let's go into what I was saying about TSLQ. TSLQ, we brought it up today in my stream, Jeff Joe. And I'm going to turn this on into a line chart, and you can just see here that once again, we've got 1, 2, 1, 2, 1, 2 at the minute degree in white, sub-mini wet at blue, and sub-mini wet, or mini wet at blue and sub-mini wet in yellow. And then there's even some microwave extensions through here. I just say that because it's actually an extension of wave 3 at the sub-mini wet, and like what you do in Elliott wave is you just go back like one step back, which would be grand super cycle, because it's just a wheel of fractals. But I don't do that, so I'm just not going to label and leave them blank. But the key here was that we had 3 sideways corrections when we should be looking for alternations in our correction cycles, and we didn't have that. So the only way to count this down to make an extension would be 1, 2, 1, 2, 1, 2. And when we got that, we find ourselves suddenly counting a 5th wave at the minute degree in a falling wedge. Yeah, falling wedge. I think it would be appropriate in Bulkowski price pattern analysis, and I think in Elliott wave it works too as an ending diagonal triangle. We have 3 waves coming down, 3 waves coming up, 3 waves coming down. I ran through this in the live. You can see the 100% targets being reached pretty much everywhere, and not the extensions. Once you stop reaching the extensions, you know that you're starting to move through a converging trend, and that is telling you that something is up. And here it's happening, I believe, in a bullish way on the bearish ETF. So let's go look at Tesla really quickly too while we're here. And of course, Tesla's heading up. And oh, now I have something else to show you here, because on the bearish ETF, this is where that wedge is right here. That's what we're looking at. We're probably topping out. Probably. I know I said that back here. Here it is again. Remember, it just depends. And look, here, this is the exact same analysis. Here's that one. Here's the same 3 sideways corrections, almost picture perfect. So yeah, that's pretty interesting. Interesting stuff. We didn't quite get this downtrend. We could. And remember, the price can always do whatever it wants. Let's go to QQQ. QQQ pushing up, next target's at 396. Price almost reached there today. Let's turn on the daily time frame. I mean, this just looks ballistic to me. This could be like, if this is a leading diagonal triangle through here, then yeah, price is gonna go crazy. But if it's not, and this is actually just an over-exuberant B wave, then we could still be in a bear market rally. We could even set a new high and still be in a bear market rally. We really could. The target for this wave, it could, if we get the C wave extend, like, listen to this. This could still be a corrective trend and top out at 420, and that could be the top of the market. And that'd be like significant new highs. Everyone would be going crazy saying that. But it happened in the 70s. It happened in the early 2000s. It doesn't necessarily mean that we're out of the woods yet. After all, this is a very short time length to make a correction from this exuberant market we've been in since 2008. So logic still stands that we will find more downside. The only question is how far and how high do we go before we get there? And that's really anyone's guess. Of course, at 313, that was where I was bearish, but we broke above that level. I said we have to respect these higher targets at 331 or 346. We've been reaching those targets, and so we have to use the extension tool on the higher wave degree as well. We've reached that extension, and that's why we now just put down the bullish targets and let the analysis guide, because the bias is worthless. We're going to go look at IWM for a second here. I had some price targets that weren't quite reached the other day. We've now blown through 194.44. It looks like I'm speculating that we could easily be forming a horizontal triangle through here, and IWM is coming up to the top of that wave now. Again, you're going to see that 100% target being reached, and this was drawn on a smaller time frame, so it's not very tight, but for me, this looks like a good place to turn around. If we break out, we're looking for retracement and then confirmation move higher before we really call bull market. And so we're going to be waiting. Again, you got to wait for the price to prove it. We need this higher high. This higher high proves it. We don't get any proof until we get the higher high. Unless, you know, it just goes crazy and volume's going up and everything is happy days and earnings are fantastic. Whew. So that was a lot of stuff. Is there anything I forgot? Did I look at NVIDIA yet? I think I did. Yeah, I think I did. Didn't I? I don't know. We've reached the target, right? On the daily time frame, bumping up to 473 perfectly, bouncing down now, breaking bearish divergence, saying the high. Yeah, I already talked about this one. Let's go to GLD. GLD is starting to come up now. You can see that we're probably ending a correction phase. It's going to be difficult to say until we really get a firm fix on what the dollar is doing. But remember, it's not the only thing that pushes the price of gold and silver. You can see that, ooh, we're starting to curl up after hitting oversold in the RSI. This could be the end of a corrective trend, which has everybody fooled. And we could see the dollar bounce from hell still come. I'm telling you, like, it's not like the markets are out of the woods. They are really not out of the woods. Not at all. We could still easily see all of the bearish things happen. After all, on the largest time frame, we could still see a move to 120.93 on the dollar. You can imagine that due to equities. Tesla, GameStop, AMC, SPY, GLD, Playboy, NVIDIA, IWM, AMD. This is getting too long. TSLQ. Oh, and the outro music. I can't forget the new outro music. Let me know what you think in the comments below. Thanks for watching. If you've made it this long, please subscribe. Happy trading.